been, I suppose, a mixed bag in terms of the global economy. That certainly slowed down a lot in the autumn, and it looks as if global manufacturing probably contracted for a few months. But in December, the numbers are a bit stronger, and it looks as if we're getting some stabilization in the global outlook. But there's quite a divergence, I think. I think there's a big Atlantic divide, if you like, because the numbers in Europe have certainly continued to be weak. It looks as if the Eurozone contracted in the final quarter of 2011. We already have an estimate that Germany contracted by a quarter of 1%, and Germany is almost 30% of the Eurozone, so it's quite likely the Eurozone as a whole contracted. And also in the UK, the figures there have been pretty weak, particularly on industrial production. So it looks as if the UK also contracted. But in contrast, the figures from America have been generally pretty good. It looks as if the United States economy picked up some momentum in the final months of the year. It's very clear there that employment has started to pick up again, and we've seen quite a strong fall in unemployment. It's down now to 8.5%, which is very high by recent historical standards in America, but it was over 10% at the peak 18 months or so ago. So it is beginning to fall. Well, I think there's a very Germanic view that everything is caused by fiscal problems, and I don't think that is the case. I think in a lot of countries, for example in Ireland, a lot of the problems were caused by relatively high personal debt, and particularly, of course, problems in the banking sector. So I think the idea of having a much tighter fiscal policy in Europe and fiscal rules will probably not have a huge impact on market sentiment, because we already have fiscal rules. We have the Growth and Stability Pact, which is supposed to prevent countries running deficits above 3% of GDP. But clearly in a big downturn, as we've seen 2 years ago, that goes out the window, and most countries are still running deficits significantly in excess of that. One of the big negatives for the global environment, for most Western countries, have seen a significant rise in inflation in the particularly last year, and Ireland was no exception. And the two main in Ireland's case, the two main drivers were higher energy prices and other commodity prices. Food prices went up, particularly in the first half of last year. And in Ireland's case, as I said, specifically, significant rise in mortgage costs. So as we move into 2012, it's generally felt, and we would share that view, that you're going to see a big fall in inflation across the major economies, largely because oil prices have come down a bit over the last 6 months. They've gone up a little bit of late, but energy price inflation should fall quite sharply over the year in the absence of an oil price spike, which is always possible, but in the absence of that, we should see some fall in energy inflation. And secondly, in Ireland's case, of course, we're unlikely to see a significant rise in mortgage costs, so falling mortgage costs will also help. So I think inflation averaged last year about 2.7% in Ireland. We think this year it may well average a bit under 2%. So I think for consumers that may offer some respite. The problem always with inflation is that energy particularly is very volatile and can have a big impact. So there's always the possibility of some supply interruption on the oil side, which leads to an oil spike. And indeed, in the short term in Ireland, we've seen fuel prices going up in the last month, partly because of the weakness of the euro, because oil is priced in dollars, so it costs more in euros to buy a given barrel of oil if the euro goes weaker. And secondly, of course, we had both our higher excise duty in the budget and a rise in VAT. which is also, of course, added to the price. So from a short term in Ireland, unfortunately, we have seen a rise on the past month, but over the year, we would expect the annual rate of energy price inflation to diminish in the absence, as I said, of an oil price spike or indeed a significant fall in the euro.